Okay, hey everyone, and welcome to this video on activity 6.4. This is an integrated question that you guys have as part of your study material. And the point of this video is basically to be going through the question. Firstly, developing a way of answering it and working through it so that we can actually come to a proper understanding of what it is you need to be doing when you are attempting a question in accounting, especially when it's an integrated question like this. You would notice that this one, it's got quite a bit of information. And various different things as well. So these aspects are what you should be getting used to, especially in the level of questioning that you guys are going to be exposed to, right? Or which you've already noticed that you guys are being exposed to. Now, the main point of this video is to firstly teach you guys how to read through this question, and then obviously answering the actual question itself. But one of the key aspects that a lot of lecturers do tend to find is a problem with a lot of students is in terms of your exam technique and how you go about answering your question. So obviously this was something that was done online. The question did specify. I'm just going through the question and going through the requirements very, very roughly, just to give you guys an overall view of what exactly is supposed to be covered and touched on by the question. But obviously, I'm going to explain it in a lot of detail because you guys need to really be understanding it. So what I will do is that instead of one huge video on this, which will take, because if we actually look at the time that we need to be answering this within 95 minutes, right? So that's over 1.5 hours. And obviously, if I'm explaining things and talking and going through that, 95 minutes can easily double. So we're looking at something like 3 hours. And I'm pretty sure that none of you want to be, sitting through a 3-hour video. I think what would be very, very relevant, or what would be more prudent, would be to actually break it up into requireds or videos based on the requireds, which is what I'm going to do. And there are quite a bit of them. Not going to lie, this was a very integrated question. And, answer it that way. So based on my count, okay, probably I'd combine some of these two, right? But we'll see how that goes, right? Although in the ideal sense, I think that it's just easier just to break it down and upload one video per required. So based on my counts, I'd say G, right? So yeah, we're gonna have about 7 videos up, just on this one question. And that's before we get to question 2. We first looking at question 1, and then after that we'll get to question 2, which will be answered as well, in the same manner in which question 1 will be attempted. So we're basically going to start off with part A, part B, right? So I think that pretty much gives you guys the gist of it and gives you guys proper understanding as to what your approach needs to be when it comes to this. So overall, I think what tends to get to a lot of students is that when you see a question like this, the volume of all the work that is here is just completely overwhelming. And you start getting a bit bogged down by the details that are here, and you're not sure, in terms of now what it is you need to be doing. How do you go about this? How do you attempt the question? Where do you even start? So I'm going to take you step by step through this, right? And this is going to be something that you guys need to be, learning as a skill on how to dissect the paper itself. Okay. So you can start from the very, very beginning, right? And like we said, question 1, and the one thing I want to point out to you guys is always be mindful of the amount of marks that you have and the time, right? So here you actually, normally the standard is to work on 1.5 marks, or rather 1.5 minutes per mark, right? So each mark should basically, you should budget 1.5 minutes to gather that, or to earn those marks. If I do this calculation based on the 53 marks, I'm going to get 79.5 minutes, basically 80 minutes. So you guys get a little bit more than, what is standard. So if you guys are finding yourself struggling in terms of time, then that is already a bit of a worry, because, standard means that you should be getting it, within the 80 minutes. You should be passing, or at least answering most of the question within, those 80 minutes. And when I say most of the question, I don't mean 51% of the question. I mean, at least nothing less than 80% of this question should get covered. So if you are struggling with that, that means your examination technique is definitely very poor and needs to be rectified as soon as possible, because at this point in time, your exam technique, it doesn't even matter how well you know your work, your exam technique, if you don't finish the paper, I mean, it follows that if you don't answer the question paper, you're going to have blanks and you can't get awarded any marks for anything that's blank. So, it doesn't matter how well you know your work then. If you don't answer the question, you're going to get 0. Having said that, though, knowing your questions, or knowing your work rather, will go very well or do you very, very well in terms of actually scoring marks, because at the end of the day, you're going to get a good understanding as to, hey, where are all of these marks? And, how do I go about gathering these marks? And, what is the most efficient, effective way of doing it? Because you know what your calculation is going to look like, or you know what your calculation should look like, or what your calculation, more or less would be, on the border of, or, mirroring, basically. So at the end of the day, this is a very, very, very important aspect that you guys need to be making sure that you get right. And the only way you're going to get your exam technique right is by doing questions under exam conditions. So not the OES method, not any of that. It's, literally sitting down and doing the question properly under exam conditions, and then seeing how you can go about it and how do you read the question. Are you able to, decipher or interpret the question? And, where are you getting stuck? Because you are getting stuck somewhere, and you're misinterpreting something. So, but you're only finding that out in the assessment, and you'd rather find that out at home when you can actually then do something about it. Okay, and it's not going to be counting for marks at all. Okay, but anyway, without further delay, I'm going to start reading the question, and I'm going to sort of give you guys a bit of guidance as to how you should be reading it and how we go about it, right? So question 1 over here says that Tsuba Limited, right? And we're seeing limited, right? Limited already in your mind should be telling you that this is a private public company, right? So I would be, making a note like that, just to say that this is a public company, right? And this is very relevant because at the end of the day, for when you guys start doing, more advanced topics and stuff, let's say when you guys start share-based payments, already you know that, hey, this is a public company, rather not the share-based payment, but more when it comes to earnings per share. You would need to present this information on your statement of profit, loss, and other comprehensive income. And obviously, there's a change in accounting policy. Any changes which have been made, any increase or decrease, to earnings per share as a result of your change in accounting policy would also need to be shown, and those are marks for free. So you would notice information about share capital being given, things like that. That is what is very, very relevant. So anytime you see something that says limited, in your mind, you should expect that there would be information about shares, dividends, that type of thing, right? And that's not information that is just there for show. It's information that is there that you guys are expected to be using, right? So anyway, Tsuba Limited is a cigarette manufacturer, right? So a manufacturer is also important because we know that it's in the manufacturing industry. So if IAS 2 was applicable, then we know that we're going to have things like conversion costs and those kinds of things, right? So that is how, again, you need to be thinking, right? So again, I would put another note there. I say manufacturer equals IS2 implications for conversion. Right. And this is important for your accounting because remember, we said that now for your conversion costs, right? So when we think about our conversion costs, we have depreciation and your, electricity and maintenance and whatnot, for your factory. But while these are expenses, right? Remember, in terms of IS2, these would not be recognized as expenses in your statement of profit or loss and other comprehensive income, right? So whenever you see what would be considered as a normal administrative expense, like your depreciation, et cetera, but you've now, because it's a manufacturer, you need to bear in mind that, hang on, a portion of this is probably going to be allocated to the asset itself and capitalized to the asset. So that is another way that you need to be thinking, right? And it's something that you need to be mindful about, right? So again, Super Limited is a cigarette manufacturer that distributes its cigarettes to retail outlets throughout South Africa. The company is listed on the JSE, so that tells us, that there would be information relating to shares, but potentially, and that it has a 28 February year end. This, without saying, is important so that you know which transactions are falling within your reporting period. Okay, that is very, very important. You guys obviously need to make sure that you are aware of that and that you know this. Okay. Right. Moving on from that, Suba Limited uses imported processed tobacco leaf in the cigarettes that it manufactures. Okay. So imported, right, is already telling us something, right? Imported is telling us foreign exchange, because obviously if you are importing it, right, then it suggests, but now we would need to read further than this to really confirm this, because remember, are they importing it directly, or is it, just an imported brand that is available locally? So but you would need to start thinking along those lines, right? So IS21 potential considerations, right? And these would be relating to your fair value gains, or rather not the fair value, but foreign exchange differences. Okay. Okay, because these are likely to happen, right? And you are very likely to actually get that. So it is something that you are definitely supposed to be taking into consideration. Okay. So when you see something that says imported, or even, if it was distribution here and it said that they distribute to retail outlets throughout South Africa and in neighboring countries or something like that, it's giving you that indication that there is foreign exchange at play. So you need to be highlighting or writing on your page, hey, you know what, IS21, right? Let's think about, the implications for that. Okay. So anyway, again, and do you see how important just your reading of the question is? That's why you can never be just skimming through the question. You need to be reading with understanding, reading with interpretation, reading to actually break down the information that is in the question paper so that you can actually account for it in the way that you are supposed to be accounting for it, and that you actually understand what it is that is required and how to go about doing it, and also to make sure that you take everything that you're supposed to take into consideration. Okay, so again, right, continuing from there, Tsuba Limited uses imported processed tobacco leaf in the cigarettes that it manufactures. The processed tobacco leaf is imported from 8 tobacco producing countries around the world. Okay, so that's fine. So this gives us an indication that, you know, it's probably direct imports from these 8 countries, and not where it's, you know, the company here is just purchasing a brand of tobacco leaf that's imported, that's being retailed by another company that's, yeah, or another business that's local, right? So when the pressed tobacco leaf arrives at the factory in Carltonville, it is checked for quality, okay, and carefully blended with other ingredients, okay, which is fine. So obviously that just tells us that there's obviously, you know, other raw materials that play that we need to take into account, right? Production is fully automated with the cut tobacco, cigarette paper, and filters continuously fed into the cigarette making machines in order to produce the perfect cigarette. So this is, okay, you know, telling us a bit about the raw materials that are involved, right? What the production process looks like, and yeah, you know, so obviously that is relevant for you guys, right? It's not just like by the way information, so that you know that this is, you know, what raw materials are at play and what we need to potentially be accounting for, right? So let's move on. So under your additional information, and you're always going to be getting it additional information. And you guys would have definitely noticed this by now. It's not something that I need to specifically point out. But what is very relevant about this is the fact that what is under your additional information are the matters that basically need to be accounted for, right? So that is what should be in opening your mind when it comes to these things, right? So the following information is an extract from the draft financial statements of Tsuba Limited for the year ended 28 February 2022, which you may assume to be correct. So the question has made it a little bit easy for us over here, where we know that these figures do not need to be adjusted, okay? Because at the end of the day, we are told that these figures, we can assume them to be correct, and we are told that these are the draft financial statements. So what it means is that there are going to be certain transactions that are outstanding, and that we probably need to now be, you know, accounting for. You know, in our, you know, when we are compiling our financial statements. So it could be transactions or adjustments, and very likely that there are transactions or and adjustments that still need to be accounted for. Right. So a good thing here is, in this case, the question has already referenced each line item to the corresponding additional information. But what I would suggest is that if the question doesn't do that, you do it yourself, right? So that you can see, okay, profit before tax, I'm looking at this. You know, for cigarette making machines, okay, there's nothing really there that it looks like. For my deferred tax, seems like there is revenue received in advance, there is something. So I can see that there are 4 matters here that definitely need to be accounted for in terms of the additional information. So these are the line items that I have to work with, and you know, they've got a corresponding adjustments or, you know, additional information that is going to affect this figure. Okay, so make sure that you guys don't overlook this, you know, and that you don't, you know, forget about linking all of this, because that is what's going to make sure that you account for what needs to be accounted for properly, and it gives you some structure in the way that you're doing your question. Okay, often we see students, they'll look at the profit before tax, they'll completely ignore this. The reference is usually given. Your lecturers will generally do that, but for some reason, students just, you know, decide to ignore it, or I think maybe, you know, when you are in that exam situation, you know, and under the stress, I guess, and the anxiety and the pressure of questioning, you know, which can really, really, you know, make you answer the question very differently to the way you would have had you approached this in a calm way. Students, tend to just fly off with this, and they're giving you these references for a reason, guys. So please make sure that you're taking these into account. Okay. So we got the amounts here. Also, what's important to notice is how they've presented the information. So there's a debit, credit, right? Whatever is a credit is in brackets, and what's a debit is obviously unbracketed. And the meaning of this obviously is that we can see that this is, in other words, a credit balance, meaning it is a profit, not a loss. This is a deferred tax liability. So even, if they didn't tell us that it was a deferred tax liability, by virtue of it being in brackets, I know it's a credit balance, so it must be a liability, right? So that's how you need to be. You're just reading and interpreting the information. Over here, we have a question mark with the deferred tax liability. So obviously, if we think about how we calculate our deferred tax, we know that, okay, great, it is going to be a deferred tax calculation that we need to be doing. Okay. So let's read the additional information under point 1.1. Right. So the profit before tax includes foreign income amounting to 531,000 Rand, dividends received amounting to 99,000 Rand, and traffic fines amounting to 13232. Okay. So now when you read this, okay, this is something that needs to be striking something in your mind, okay? Because these are adjustments to profit before tax, correct, right? Now, here's what you need to ask yourself. Number one, should this be accounted for in my accounting profit? Should my accounting profit include this? Because it's telling me that the profit before tax includes foreign income, dividends, and traffic fines, right? So should my profit before tax include those figures? And the correct answer is yes, right? Those are supposed to be in your profit before tax figure, right? For the purposes of financial reporting. Right, so there's no stress on that. So then why did they feel the need to give me an itemized list of items that were included in my profit before tax if they are supposed to be included there? What am I supposed to do with these items? I'm not supposed to take them out of my profit before tax for financial reporting purposes because I've confirmed that they are supposed to be there. So what is the point of this? That's a question you need to ask yourself. So let me, while you're watching the video, some of you probably know the answer to this, but think about it, right? Think about this question, ponder over this for a moment. I'm not going to sit too long on it, right? But ponder over this for, a minute, right? What is the relevance of this information? Okay. And I am going to make a comment on here, right? Because this is, again, how you are supposed to be reading the question, right? Before you jump into answering it, you need to be analyzing and interpreting rather, the information that has been given to you. So again, right, why was this information given to us? And this is normally where if I was doing a live class, I'd be waiting for answers, right? But I think that I've given you guys enough time to answer this question in your own mind. So the reason for this is while it is supposed to be taken into consideration when determining your profit before tax, it's not supposed to be taken into consideration when you are determining your taxable income for income tax purposes. So the question is basically telling you that, hey, profit before tax includes this, which is correct. It's supposed to include that. But remember that for income tax purposes, these items need to be adjusted and they need to be reversed. So your profit before tax needs to be adjusted by these items when determining your taxable income. Okay. And these are what we refer to as permanent differences. Okay. So that's what they've given us over here, right? Non-taxable income and non-deductible expenses, right? Because that is what these are, equals permanent expenses which need to be taken into account when calculating income tax, right? And more specifically, when we're calculating our current tax expense. Okay. So that is very, very, very important to note, right? And it's already given on, the information that is there saying, right, and substantiating that the foreign income received is not taxable in South Africa in terms of various double taxation agreements. Super Limited paid foreign taxes of 132,750 on this income, which you can assume has been correctly accounted for. Dividends, are not accounted for, and the traffic fines are not tax deductible. Okay, so we already know how this is going to be looking in terms of calculations. We already know income tax expense calculation, or rather, obviously a current tax expense, which forms part of that. And, looking at potentially the note. I haven't even looked at the required in detail yet, but already I'm thinking of that. And you can make notes of that on this on the page. We wouldn't be the worst idea to do that. But again, that is what you need to be thinking about. And make sure that you use all this information, because this is literally just given to you. So you just need to be plugging it in. Okay. Now let's move on to the next one, right? A new retailer, right, made payments in advance for their first delivery of cigarettes from Tsuba Limited early in March 2022. Okay, so this isn't too difficult to reason out, right? Basically, what did we say is and this is why I've said that the financial year end is very, very, very important, right? Because 28 February is our financial year end, and this is the financial year end that we are working with, right? And over here, we've got an advance payment or revenue that has been received in advance, which obviously, if it is income received in advance, would not be included inside our revenue. So there's no indication that there has been this amount included in our revenue. So this is likely forming part of our deferred tax calculation. Okay. So that is what you need to be thinking about, right? Because there's nothing that's saying that, revenue was accounted for incorrectly. So this, again, what is it? It's liability to be taken into consideration when calculating deferred tax. Okay, simple. Okay, not a problem at all. Then on the 1st of January 2022, Tsuba Limited paid their quarterly rent. Okay, so this is something that, does sort of stick out for me, right? Quarterly rent for the administrative office space amounting to 150 for the period ending 31 March 2022, right? So where is this administrative office space, right? Before I add my comments, I'm going to say, administrative office space over there. That says a lot to me, right? Because at the end of the day, your administrative office space, remember what we were talking about when we started out, right? We said that obviously there's going to be other overheads and things like that, and anything relating to the factory would have been a manufacturing overhead and would not have formed part of the income statement, right? Because it would have been capitalized to the inventories. But here we can say that, administrative overhead, because that's what it is, right? It's not a manufacturing overhead. It relates to the administrative building. So therefore, spends the full amount, right? That's basically it, right? Expense the full amount. However, we need to note, right? This is quarterly. So quarterly is what? January, February, March, right? So we need to take this into consideration as well now. So we need to say, okay, how many months do we need to account for, right? So the rent is paid for 3 months, right? Which is basically Jan, Feb, and March, right? But we only need to account for Jan and February because these fall within our financial year. Or rather saying current reporting period. Makes more sense to say it that way. Right. So therefore, right, you need to break this down. So therefore, rents expense relating to 2022, right, in respect of this payment, not in total, right, just in terms of this payment, will be the 150 over 3 times the 2 months, which is equal to 100,000 rand, right? Because we only need to account for 2 months because only 2 months are falling within our financial reporting period. Okay. So that's a very important thing. I'm just going to leave it a little bit on the screen just so that you guys can absorb that, and make sense of it, so that you guys can actually read it, understand it, and get to grips with what we've done. This, guys, is very basic. This, I wouldn't even call this third year work. This is literally, basic accounting. So you guys need to make sure that you know this because it's easy marks, it's free marks, it's not a difficult concept to understand. So don't be losing marks over something like this. Okay. If you feel like you don't understand this, then you need to then be trying to get assistance to actually get your basics to where they need to be. So I would recommend you go back to your notes, and even if you have to revisit your second year work, that you do that again. Right. So then moving on from there, right, the deferred tax balance, right, 1.4 says that the deferred tax balance for the year ended 28 February 2022 has not yet been calculated, right? So that's what we do there. Now, this is, pretty easy because we can see that it's not been calculated because it's shown there that it's not been calculated, right? That's why we had all of this whole question mark situation going on over there, right? So if you want to highlight the question mark, you can, that's not a bad idea either. Yeah. The deferred tax liability for the year ended 29 February 2021 has not been adjusted for the information in additional information 3 below and represents the deferred tax liability as presented in the annual financial statements for the year ended 29 February 2021. Okay. So basically, right now, what does this mean? Right? Because now when you're reading this at first glance, it sounds like they're saying, oh, it hasn't been adjusted for this, so it must be wrong or something like that. Because that's normally the person that would come into your mind, right? So let's break it down and make it simple for you to understand, right? They've told you that these balances are correct. Okay, so that means that this deferred tax liability is correct. What they mean is that opening balance has not been adjusted at all. So we can continue with that as our opening balance. There are no other transactions to take into our accounts, basically, or, because what is the opening balance there is the opening balance that's there. It hasn't been adjusted, right? And specifically with regards to the additional information in point number 3. right? So it's not saying that that information or that calculation there or the amount there rather was incorrect. No, it's not telling us that at all. What it is telling us, though, is that we need to be adjusting that amount during the current year, processing certain transactions, and especially looking at this one. This isn't the only one that's there, but obviously when you're reading this is what you would be starting with, because they are, drawing your attention to this for a reason. Okay. And so make sure that you answer it, because it's obviously they're drawing your attention to it. A lot of the marks are there, right? And like we said, it represents the deferred tax liability as presented in the annual financial statements for the year ended 29 February 2021. So unless they tell us somewhere that there was a prior period error and this was wrong, which is not going to be the case because they've already told us to assume that it's correct, this is the thing that this is what you can use as the opening balance, because you guys know how you get to that movement in your deferred tax is the opening balance of your, the closing balance of your deferred tax less your opening balance will be giving you your movement in your deferred tax that you take into your income tax calculation. Right. The next point says that Tsuba Limited uses a few cigarette making machines at its factory in Carltonville. Okay, so this is telling us again PPE. PPE should be coming up in your mind, right? The cigarette making machines were acquired on the 1st of March 2018. Okay, on the 28th of February 2022, the operations manager of Tsuba Limited physically inspected the cigarette making machines to determine their production capacity. Okay. The operations manager reported that the cigarettes making machines are running at full capacity. So that's fine, right? Consequently, the remaining useful life of the cigarette making machines are only 2 years as at the 28th of February 2022. Okay, so now what we need to start looking at is that, okay, fine, if this is only 2 years as at 28 February 2022, has there been a change in estimates as well? That's something that we need to be thinking, because it's suggesting that the remaining useful life has been changed, right? So again, suggests a change in useful life, which is a change in estimate. Right, so this is again what you need to be thinking about and taking into consideration. Now, I don't think that they've given us much more information with regards to the, oh, they have. Okay, so this is good. Yeah, right. After due consideration of the operation manager's report, the financial director decided on the following changes to measure the depreciation charge for the machines, okay, for the cigarette making machines, right? So the depreciation method of the cigarette making machines, for both the current and the future year, will be changed from the reducing balance method at 20% per annum to the straight line method over the remaining useful life of the machines. Okay, so there is a change in our method of depreciation. And the fact that they told us it was 20% per annum tells us that this was, 5 years that was being that we were depreciating them over, and now the remaining useful life is 2 years. So we'll go and do that calculation now quickly, just once you've read this information, right? The residual value of these cigarette making machines will change from 500,000 to 400,000. So it's a change in residual value, which is also a change in estimates, definitely to reflect their increased usage. Right. The depreciation charge for these cigarette making machines was accounted for in the current financial year before the operations manager's report and the financial director's decision above was taken into account. No other cigarette making machines were acquired or disposed of in the current year. So what this is basically telling us is, hang on, right? The depreciation on the machine that has been accounted for is incorrect, because it says it has been accounted for So that's fine, right? So here we got, let's first make our notes, right? Change in accounting estimates over there. So we know that that's a change in estimate. And well, we should basically address both of this as far as I'm concerned. And over here, right, it would suggest that the depreciation charge taken into account for the year is incorrect. Okay. So we need to recalculate our depreciation. So we already know that when we are doing our profit before tax calc, we definitely have depreciation as a line item that is going to be different and that needs a change. Okay. So that is, it should be pretty simple to see and to understand that perspective, that point over there, right? And this is how you need to be answering your questions and making those notes. Right. The South African Revenue Service allows a tax allowance on machinery at 20% per annum, according to the straight line method in terms of Section 12C, and it's not apportioned for a part of the year. Okay, so that's basically giving us information as to how we will be calculating our wear and tear on the machine. Okay. Now over here, I think that this pretty much flies in your face, right? Because you can already see, that when we have something like this, it's already telling us it's a change in accounting policy. Okay. So reading point number 3, in order to adhere to the company's quality commitments, the processed tobacco leaf should be used in the production process within a certain time frame. Okay, so that's fine. Tuba Limited thus keeps a limited quantity of the processed tobacco leaf as inventory. After the draft financial statements for the year ended 20 February 2022 had been prepared, the directors decided to change the inventory valuation method of the processed tobacco leaf, right? Because it did not give a reliable presentation of the effect of foreign exchange rate fluctuations on the company's profits. Okay, this is important to highlight and to make use of later as well. This isn't information that's given by the way. Remember, when you do your change in accounting policy note, you would need to state why your accounting policy was changed in the first place. And the question is already giving you the answer to that. So use the information in the question. Okay, don't go up and think of your own answer somewhere. They are giving you this information in the question. It's marks for free. So don't come up with your own reason or anything like that. This information is there, it's given to you. So guys, make sure that you do use it. Okay. It's very important. You don't need to even think a lot about that, right? You can literally write, what is as part of your reason for why there was a change in accounting policy, because it's information that's given to you. Okay. The inventory valuation method was therefore changed from the weighted average to FIFO. Okay, that's fine. And then the value of inventory based on the various valuation methods was as follows. So on the 28th of February 2022, which is the current reporting date, prior date, and the year before that, which is also the opening balance for 2021. Right, that's just something just to be very, very mindful of. And what is important for you to see is that you can get the cumulative and period specific effects for each of these periods, right? Because the information for all 3 dates have been given to you. So you can go fully retrospective in your approach. If this information wasn't given, right, we wouldn't be able to calculate obviously the difference over there, and then we wouldn't be able to calculate the other period specific effects for 2021. And then we wouldn't be able to go fully retrospective. It would just be more of a limited retrospective approach. So sometimes where they put like question marks over there, something like that. So that's just giving you guys, just that hint the way you should be reading it. But obviously we don't have to worry about that. It's fine. We can go fully retrospective. There's no problem with that at all, right? Over here, the SA Revenue Service indicated that they would not accept the new inventory valuation method, okay, and that they would therefore not open, or they would not reopen prior year tax assessments. So this is important, right? Because what this means is that, number one, right, as far as SARS is concerned, right, the tax base for deferred tax purposes is equal to the old method, right, which is on the weighted average method, right? Also, any taxation implications will be deferred tax, right? There won't be current tax because you're not going to, SARS is not going to reopen the tax assessment for those years. So those assessments cannot be, your current tax figure will not change, right? So again, no change in your current tax, right? For your previous years. Let me just add that, right? For previous periods. Okay, that's very important for you to take notice of and to bear in mind and take into account. Okay, you will not change. There will be no changes to your tax, to your current tax for those previous periods. Any changes in taxation will be deferred tax, and you will have these because remember, with inventory, normally your tax base is equal to its carrying amount. So for the current year, our tax base will be equal to the 301. But for the prior years, right, this was the tax base, right? Now, when we're doing the change in accounting policy, previously, okay, it was 235 and 211. That was the carrying amount. So the carrying amount and tax base were equal to one another. There was no deferred tax. But now we're going to still have 235 as our tax base, right? But we're going to change the carrying amount to this. So there is going to be a deferred tax implication. And you'll see that when we do the calculation, in full. Right. Suba Limited made the following provisional tax payments for the year ended 28 February 2022. So this is just to say, okay, what is the current tax liability or the current tax asset? Because obviously you need to calculate what is the total amount that we are owing. And then obviously you deduct your provisional payments to say that, okay, this is what you are going to ultimately either be owing or SARS is going to owe you. Okay, so that's simple enough, right? Then we said deferred tax is provided for on all temporary differences in accordance with the statement of financial position approach. So the statement of financial position approach, what that means is, when you have the calculation and it's carrying amount, tax base, temporary difference, that's basically it. And then you have all your assets and liabilities that are there. That's because what are you looking at? Assets and liabilities are which financial statement? Our statement of financial position, right? There are no other items causing temporary or exempt differences except those mentioned in the question. So that makes it very easy for us, right? It is probable that the company will have sufficient taxable profits available in the future against which any unused tax losses can be utilized. So what that means is that if we end up having a deferred tax asset, then we know that, okay, we can recognize the deferred tax asset in full. So the fact that they've told us this suggests potentially that we would end up having one. But it's not a guarantee, but it is just something just to take into consideration, right? Because it does sort of hint at that. Okay. And then what else gets said is that the normal tax rate changed from 29% in the previous years to 28% in 2022. So all this means is that you need to make an adjustment to your deferred tax to reflect deferred tax at 28%. So you would have that 1% adjustment. So you would have your deferred tax opening balance divided by your 29%, multiplied by your 28%. And obviously the difference is what your adjustment is. Okay. And you guys should be knowing how to do that, and assume all amounts to be material, meaning that you don't ignore any amounts that are given to you, which I'm assuming you guys weren't going to do anyway. Right. So here's the requires that we have. And, look, you're getting, well, back then you would have been getting 1 mark just for using Microsoft Word in order to answer. So, a mark is a mark, so I wouldn't leave it if I was you guys. I would, because at the end of the day, you want to grab every possible mark that you can get. Now, what the questions asks here, part A, is calculate the correct profit before tax in the statement of profits or loss and other comprehensive income of Tsuba Limited for the year ended 28 February 2022 by taking all the above information into account, right? So this is what our starting point is. And obviously with this, what is very important to notice that profit before tax, so all information into account, right? Meaning all information that impacts my income statement must be taken into account, because that is what's going to affect my profit before tax. So when we go through this, I think I'll make that in a new video, right? Any items that are going to be affecting the income statement are what will come here into this calculation. So a good way of thinking about this is to think about journal entries for all of the transactions we've gone through. And if there are any journal entries that are affecting our income statement before taxation, and obviously we can see the easy one here is going to be our depreciation one. And, because that one is the one that's really sticking out for me. That one is, what needs to be taken into account, right, in determining the profit before tax, right? We don't need to adjust for this. It doesn't look like it for the prepaid rents, or rather the prepaid rent, but rather the revenue received in advance, because we've been told that this figure is correct, but it just needs to be amended for, right? So these are all of the requirements for this, and obviously these are standard. Your answer must comply with IFRS, show all calculations, and round all amounts off to the nearest rand. So we will go into more detail with this in the next the next video. We will actually then start calculating each of these amounts to then start getting to the answer. What is good exam technique also to do would be to start multiplying each of these by 1.5, just to know, okay, this is how much you need to be allocating to your question. It looks very daunting when you just read the question like this, but or the required like this, but now having read through the question, that should make it a little bit more easier and more digestible for you guys to really start answering the question, or to at least be approaching the answer to your question. This is largely based on your understanding or an interpretation of this information. It is important for you guys to be fully aware of how you go about doing this question. And at the end of the day, I think that your interpretation comes into play, and your understanding, to a very large degree, depending on how you read it. And that's going to influence the way that you answer the question. So taking the time to read. Okay, obviously we've taken an hour. You're not going to spend an hour reading the question, because you'll never get any time to answer it then. But this is how you need to be going through the question in your reading time. Okay, because that's how you're going to be gathering marks, and how you're going to be interpreting the question, and really, start understanding what it is you're supposed to be doing. Okay, so, that's basically going to be that for this video, right? I don't think that we're going to really push beyond this, but we will start, I will release videos based on each required a little bit later, as we, go through the question paper. But it is important for you guys to make sure that you have a solid understanding of all of this and that you are able to answer these questions, or rather at this point at least that you're able to read the information and get all of this information in your mind, and know how to interpret it rather than just running through it. Yeah. So I hope this video has helped you guys, at least in terms of your reading, so that you know how you're supposed to be breaking down the question and what some exam technique is, what it would be looking like for you, and to hopefully start correcting your way going forward. And then in the next videos, we'll start looking at, okay, fine, once we've read all the information, how do we now start answering the question? Okay, but I'll leave that for you guys in the next video. For now, make sure that you guys can do what I've shown you, get a complete firm handle on that, and that's gonna, it's gonna serve you well going forward. Okay, so keep an eye out for the next videos. I will upload those soon. But again, start with the basics and make sure that you can do these.